Blackstone President John Gray called 2026 the year of the IPO at the WSJ Invest Conference, pointing to improving regulatory conditions, lower interest rates, and an upcoming IPO pipeline including SpaceX, OpenAI, and Anthropic. When the president of the world's largest alternative asset manager makes that declaration publicly, the correct LP response is not excitement. It is analysis. Here's the practitioner's read. Blackstone's IPO pipeline entered Q3 2025 at its strongest level since 2021, with capital markets activity across the portfolio totaling $124 billion in the quarter, including debt and equity activity. That momentum is real. The exit environment has meaningfully improved from the frozen conditions of 2022 and 2023. But the year of the IPO framing deserves scrutiny on three specific dimensions. First, vintage year pressure. The PE funds that most urgently need exits in 2026 are the 2019, 2020, and 2021 vintage funds, acquired at peak valuations, with extended hold periods due to the 2022-2023 exit freeze, and with LPs who are now significantly overdue for distributions. Blackstone's 2015 vintage fund had a DPI of only 0.85 times as of mid-2025, meaning LPs had not yet recouped their invested capital after 10 years. The DPI pressure is real and it is structural. Second, quality versus inventory. Blackstone Q1 2026 earnings noted that significant recent market volatility and broader uncertainty pushed out exit pipelines and slowed realization activity in the near term, with management noting that a durable resolution of Middle East conflict would be required for robust activity in the second half of the year. The selective IPO environment means only the strongest assets can access the public market right now. The weaker vintage assets, the ones most urgently needing exits due to DPI pressure, may not be the ones accessing the IPO window. Third, what's going to continuation vehicles instead? When a company goes into a continuation vehicle rather than an IPO, ask which interpretation applies. Is it too weak for public market scrutiny, or too strong to sell at current prices? The answer to that question, asset by asset, is the real measure of vintage year quality. The year of the IPO is coming, but LP sophistication means reading the exit composition carefully, not just celebrating the volume. Subscribe for more LP-level private markets analysis.